Hi everyone, Ryan Lohman here at Kenson Investments. I want to spend a few minutes today unpacking how President Trump's tariffs are impacting both the stock market as well as the digital asset world. But more importantly, what we here at Kenson are doing from an investment positioning standpoint. First, on the equities front, tariffs function like a tax on global trade. They compress corporate margins, disrupt supply chains, and create real uncertainty around future earning growth, particularly in sectors most exposed to global imports and exports like industrial tech, as well as consumer discretionary. We're already seeing this reflected in the recent pickup in the volatility across the S&P, the NASDAQ, the Dow, and even the crypto markets. Equities are forward-thinking, forward-looking, and pricing in not just the direct cost of tariffs, but also the potential for retaliatory actions from other countries, slower global GDP growth, as well as tighter liquidity conditions. But what's equally fascinating is the emerging behavior of the crypto markets in all this. Historically, Bitcoin and digital assets have been somewhat disconnected or decoupled from macro headlines, but that's changing. With increased geopolitical tensions, currency instability, and trade wars brewing, crypto is starting to behave more like a risk-off asset, at times trading like a hedge against traditional financial systems. In fact, in recent weeks, we've seen measurable increases in Bitcoin volumes coming out of regions really directly impacted by trade disputes and currency devaluation, particularly in Asia and parts of other emerging markets. So what does this mean for you, the investor? First, diversification is key. It's no longer optional. We're in a multipolar world where assets respond very different to macro catalysts. Secondly, digital assets are maturing into a new kind of geopolitical hedge. Here at Kenson, we're allocating select projects and assets that exhibit strong liquidity profiles, that are working with institutions and have robust infrastructure. And lastly, we're leaning into active management, passive exposure. Working in a zero-rate world, but navigating tariff-driven volatility requires an active risk management, dynamic hedging, and a really tactical flexibility across all asset classes. We'll continue to watch this closely, both the evolution of trade policy and the ripple effects across global assets. As always, here at Kenson, our focus remains on protecting capital, finding opportunities, and staying ahead of rapidly changing market landscapes. I appreciate your time. Thank you for your continued trust and commitment here at Kenson Investments. Thank you.